Hello everyone, Leigh here from Martinuzzi Property Group with another weekly real estate market update. This week, the RBA has announced that cash rate increase. So it's an increase by 25 basis points, taking the cash rate now to 0.35%. Now, it is predicted that most of the major banks, or all banks, will pass that rate rise on in full, which means now your mortgage repayments will have gone up. For buyers out there looking to get a loan, that means your borrowing capacity will be slightly reduced. And for sellers, it means potentially the buyers may not be willing to pay you as much as you'd like because their borrowing capacity has been reduced. And that's typically what happens when we start to see rates rise. Now, this is the first cash rate rise since 2010, and it's the first in a series expected to happen over the next 12 to 18 months. Some banks are saying there'll be an increase to about 1.6%. Others are saying maybe 3%. Now, with the current interest rate increase, if you have a $500,000 mortgage at the moment, that means your repayments will increase by about $65 a month. Now, if that rate rise does go up to 2% eventually in the next 12 months, your repayments will be increased by about $512 a month. Now, what is this doing? Well, there's a number of things that have occurred over April: the war in Iraq, the floods that occurred, there's the call of the election, the speculation of the interest rate rises, of course. All these concerns have certainly slowed the pace of the market. And in April, property prices rose by just 0.6%, which is well down from where we've come from. And it's really thank you to Brisbane and Adelaide, mostly, that has helped keep that dwelling price index in the positive territory, because Brisbane had a value increase over the month of April by 1.7%, which is still very much in the positive territory. But it is slowing. The amount of activity at the moment, the buyer sentiment has changed, and we need to manage our expectations going forward because that's going to continue to change. Now, I'm pretty confident up here on the Sunshine Coast because of the lack of property availability and still the sort of increased demand from southern buyers coming up here. I think we're going to remain fairly strong. And for sellers, you can remain fairly confident that the prices you still get offered now will be very welcoming and be very favorable. However, you may not see it happen as quickly as we did in the past. And that's certainly what we're experiencing. Instead of great offers coming in and multiple offers coming in very quickly in that first week, we're now seeing properties sit on the market for 4 to 5 weeks. Now, that's case by case, of course. But if you look online, you can see that properties are now sitting there longer, and both buyers and sellers can see that. So guys, we have seen the market shift. The peak of the market has passed. I think once the elections pass, we'll see a bit of a spike in interest and buyer activity as well, because the elections do create a little bit of uncertainty. However, historically, regardless of the outcome of the elections, it doesn't really play a major impact into real estate and the property markets around Australia. Guys, that's my weekly real estate market update for you this week. MPG with you all the way. Have a great day. Bye.